We're live at Expert35. I'm your host, Gabriel Garcia, and as promised, experts from 35 different industries talking about the challenges, the hardships, and the opportunity. And man, we've had so many things happen in Texas with all these, freeze, the housing market's going crazy all over the United States. And now it's really an opportunity to talk about the housing market and bring in an expert like Craig Levin, OG Expert22. Thank you for joining us again.
Thank you, Gabe, man. How you doing?
Man, doing great. And, I'm glad everybody's safe. But we've had so much interest, so many people asking us about constructions, about building, about the housing market, about rates. And I couldn't bring anybody more of a senior and an expert than a mortgage loan consultant, Craig Levin. I'll even throw it out there. First United Mortgage Group, NMLS number 6066. How long have you been in the business now?
17 going on 18 years.
Man, and this last year, you just hit some records too, right? Like it's been a really, really exciting year for you. Tell us a little bit about that.
Yeah, so apparently COVID plus elections makes rates go down, and rates go down, business goes up. So it was a fantastic year for me. It was a very grateful and happy, and helped a lot of homeowners buy houses and refinance and drop their payments.
Awesome, and you helped us refinance, so thank you for that as well.
Sure.
So, what is it? Not just a client, or not the president, but a client. No, Craig, it's a hot market. I mean, things are moving off the shelf, and people are saying that there's just not enough inventory. So, is this like a good time to build? What's the next phase, especially as rates are kind of changing too, right?
Yeah, so let's just jump into rates real quick. This is just an FYI. I don't have a rate conversation, but rates have gone up about half a point since February 1st. So rates were in the high twos. We're now in the low threes or three-ish. And the reason is what I said earlier was COVID and the elections drove rates down, and now it's over and rates are coming back up. So that's just an FYI. With that being said, the Houston housing market is super, super hot. And for certain parts of town, Memorial, Westview, Heights, some of the really hot areas, it's a seller's market. And what that means is you might have to get in a bidding war to buy a house. So you might have to pay more for that house than you would have had to 3 months ago, 6 months ago, a year ago, 2 years ago. With that in mind, it's also a great time to build a house, right? You can build your dream house and not pay the premium because it's a buyer's market.
So interesting. The great question already from Greg. Are there higher qualification requirements for construction loans?
A little bit. Yeah, you got to have pretty good credit. Ideally, we want you to be 680 for a mid-priced home and 700, 720 scores above. If you had lower credit scores, you can get a regular mortgage, not with a construction loan. You do need the higher scores.
So let's talk about it, because I think a lot of people are I can just see the feed now coming through is like, what is a construction loan? Like, what is it? Like, how does that work? What's the instrument?
Right. So what you're doing is you're going to get financing through a mortgage company, and not every company does it. Most companies don't do it, in fact. So only several of us do, and my company has one of the best programs out there, and it is a true one-time close or two-time close loan where we will finance the construction of your house. So we'll talk about a little bit more of that in depth of how that works. But yeah, we will finance the building of your house. Step one would be to get qualified. So people need to speak to me first and say, I would like to build a house. What is my budget? This is critical because what we don't want you to do is go straight to a builder first, build your dream home, and then you speak to me, and then I'm knocking out walls and bedrooms and square footage because you can't afford that dream home. So come to me first, let me qualify you, and then you can go start looking for builders.
Now, quick question. There's a couple of people are asking, are the rates the same or is there more risk? How do the rates compare in terms of buying a home
Yeah.
versus building a home?
So with my bank, and this is bank specific, with my bank, whether you want to buy a house for $1 million or you want to build a house for $1 million, the rate is the same. We don't
Hmm.
inflate that rate, which
Really?
is a very nice benefit. Not everybody does that. That's a very nice niche product that we have.
Now, let's talk about what it is and what is the process, right? Because offline we were talking about there's a couple of different ways between, you know, when you get the loan, do you buy a custom built home? Do you design it? Like, what are the different ways to go about getting a building your custom home?
Okay. So first thing, right, is you're going to go ahead and you're going to get qualified with me, and I'm going to tell you your budget is X, whatever your budget is, right? Then you need to find where you're going to build it. So you need to find a lot. You need to either buy that lot with cash. You need to get a loan for that lot, or the third
Mhm.
option is you can buy the lot and finance the construction together. The builder does need to know where you're building the house, though, because the house has to fit the lot. Makes
Right.
sense, right? If they're removing trees, if they're moving fences, gas lines, sewer lines, all that kind
Easements,
of
all
stuff,
that, right?
all that. So you kind of have to have your lot targeted, and find your builder, or you can find your builder, but then customize the house to the lot.
Hmm.
Now you have to find a builder. There's different builders. There's a custom builder. There's semi-custom builder. A custom builder will be a builder that you would sit down, get an architect or designer, and basically say, hey, my budget is X amount of dollars. I want 4 bedrooms, 3 baths, or whatever it is, this much square footage. Here's what I'm looking for, master up, master down, and then they design your house. And then that builder will build that house for you. Then there's a semi-custom builder. A semi-custom builder are the big brand builders you've heard of that build neighborhoods, so to speak. And you'll say, again, I want to build a 4-bedroom, 3-bath house for 3,000 square feet, 2 stories. And they say, okay, here's our 5 plans to choose from. You choose one of the plans, and then you got to upgrade the floors and the cabinets and the paint and all that kind of stuff. So you got to know which kind of build you want to do, and then you got to find the right builder to match that.
Shauna's got a great question. She's asking, how long is the process to be approved? Like, so, I mean, you're giving us the steps, but what's the timelines?
That is a great question. So from the day for me to pre-approve you is same day. You fill out the application in the morning, I get you pre-approved that day. From the time you meet with a builder, if you're going to do a custom build, that's a minimum of 3 months for you to design, to budget, to plan the house out.
Mhm.
If it's a semi-custom builder, it's a little bit less, maybe 30 to 45, 60 days. That is an awesome question. You need to know that. So you get your building design plans done, and then you come back to me for the finance. And then I need 45 days to close the loan.
Well, we talked this offline, and I thought it was really interesting. It's like, so you close the loan, right? You're ready to go, but you don't pay interest on the full amount, right?
Right.
There's actually like a process, right? For before we get into that, there's a good question from the crowd. Does it cover the design phase?
Yeah, you can get rolled in.
Rolled in.
So
Got it.
be specific to your designer, specific to your builder. But yes, you can have your builder add in the financing of the design into the cost.
Okay, so now how does the instrument work? You got a $500,000 home. We're start building.
Right.
How do you break it
So
up, or how do I do payments on that?
so the builder can ask for a little bit of money up front. Let's call it 5% up front. So let's just say we give him 20 grand to start. That's for startup fees, putting up the fence, cleaning it out, getting the porta potty out there, taking down a tree or whatever they have to do. And they provide us what's called a draw schedule. So just think about a list and listed A through Z, and it says clean lot, $1,000, fence $500, so on and so forth. And then put in the slab. Let's call it $8,000. So they do A, B, and C, and they tell us, hey, we did A, B, and C. We then send an inspector out there to inspect, did they in fact do A, B, and C? And if they did, and the builder said, hey, that was $8,000, then we finance $8,000. And now you're paying interest only on that amount of money. The builder then will do more work, right? Now he'll put in the slab, he might put in the framing, and come back to us and say, okay, now I need $50,000. So we go out there, we inspect it again, not quality, just did he do it? And now we owe you the 20 from the beginning, the 8 from the second draw, and then that amount, and you add it all up, and now you're paying interest only on whatever the math is. And it keeps working like that throughout the process. So it's interest only incrementally during the whole build process. And then when the house is done, it converts to a full principal and interest payment.
So now, that's a great question, because somebody's asking, what about unexpected construction costs and delays? So if there's scope creep and stuff, then you don't start paying interest, the principal until what day, or is it predetermined?
So, right. So we have a set, you're going to sign a contract, and depending on the price of your house, a more expensive house, you get more time, obviously, right? It's a bigger house. It might take longer than a smaller house. Any delays between you and your builder is between you and your builder, but we're either going to give you 12 months to build the house, or we're going to give you 18 months to build the house. After that, there are penalties to the rate, where the rate would be slightly inflated if you went past the time. And then when the loan is finished, when the house is finished, then it goes back down again.
I think what's really interesting is people are like what you were saying earlier is like, because of the market, right? That, talk a little bit about getting into a house in Westview, getting into a house in River Oaks. Like what is the opportunity cost, and what's the value, and what do you provide in terms of being able to get into a home by building instead of trying to buy a house?
Right. So what's happening right now, this is absolutely very recent. And when I say recent, I mean the last 30, 45 days. The market is hot. There's a lack of inventory, and there's demand for certain neighborhoods: Westview, River Oaks, Memorial, Bel Air, Tanglewood. And because there's lack of inventory, and I've seen this quite a bit recently, let's just say a house is being sold for $800,000. You might have 4, 5, 6 people wanting that house for $800,000. And so now it becomes a bidding war, and whoever bids the highest wins. So that house that should cost $800,000, you might have to spend $840 or $850 to buy it. So you're paying overprice. I have one guy trying to buy a house now. He's made an offer on about 12 houses. I'm not kidding you. And he's not gotten any of them because he's not bidding high enough. And he's not offering low. He's offering asking price, and he's not getting the houses. So as opposed to overpaying for a house today, you can always just build your dream house today. That is an option.
Great question from Shalini. Like, is this a one-time close product? And can you explain what that means, 1 versus 2 close product?
Awesome question, Shalini. So yes, there's 2 types of construction loans. There is a one-time close, and there's a 2-time close. And there's different lenders, and some lenders only do 2 times. I do 1-time close and 2-time close. All cards on face up. The 1-time close is the better option if you can get it. A 1-time close is you do everything once. You apply once, 1 credit report, 1 set of closing costs. You get 1 rate, the loan closes, and you're done. A 2-time close is you do everything twice. 2 credit pools, 2 applications, 2 appraisals. You get the loan to build the house. So it's a temporary loan to build the house. The house is finished, and now you have to refinance it into a second mortgage. So is
it like a balloon then? So balloons, and that's where you have to buy it out?
Basically, yeah. Basically, yeah. It's kind of like an adjustable rate balloon type of instrument. So the with my bank, the benefit of the 2-time close is that if you own your current house and you want to buy a new house, your what's called debt to income ratio goes up to 55%. So it's a lot more generous to qualify for if you own a current house.
Interesting, conversations I'm seeing is, what about seller financing? I mean, obviously you're an institution, but is or do builders finance you as well? What are some of those instruments, and what are some of the things that we should avoid?
Sure. So there are a lot of builders that will build a house with their own money. And that's called a
Hmm.
spec house. They take the risk, they buy the lot, they build the house with their money, and then they sell it to you. If
Hmm.
you get in early enough with that, then you can kind of customize your cabinets and your fixtures and paint colors. But if the house, I bought a spec house,
Hmm.
but mine was finished the house, and then I bought it. I had no options, I had no upgrades, I had no nothing. I bought the house as is. Um, so that is an option as well to buy new construction. Again, so if you get in early, you can kind of customize it a little bit. If you don't get in early, you're out.
Hmm.
Um, some builders, not a lot, some builders, if you can't get financing, will say we'll build the house on their dime, and then your custom house on their dime, and then you'll buy it from them. But it's very rare. Not
Hmm.
most builders don't do that.
Yeah, it's too much risk to take on. Such
Too
interesting
much risk, too much
information.
money.
Right.
Hmm.
No, and there's more questions, but I think one of the things that, like, my favorite part of the show is we talk about, okay, it's the market's changing, rates are changing. Like, what are three things we should take advantage now?
Right. Well, the market's hot, right? So again, rates are low. You got to think about that. So rates are historically low. They're not as low as they were a month ago, but they're still very low. You can build a house around 3%, 3.1, 3.2. That's amazing. It can be your dream house. There's a ton of great quality builders out there. You could build your dream house for relatively inexpensive. Again, during the construction, it's less. And location, listen, Houston flooded, right, a few years ago, and there's still a ton of houses that have not been fixed up. And those houses, you're basically buying land for lot value.
Hmm.
So you got to look at that. I mean, that's just an awesome opportunity to buy in a great neighborhood a house for land as opposed to a house and land. If that makes sense.
Absolutely, and I think that's actually something we didn't really state, but you're out of Houston. Not only did you get hit by this last winter storm, but even since Harvey, right, and other floods, like, there's great parts of Houston that if you can buy that land, right, you can tear that house down, build it up higher, like build a really, like, amazing property, and
Yeah.
you'll be in the middle. You'll be in the middle of Houston. You don't have to go out to the boonies, and I don't want to say communities. You want to, that's not what Expert35 is about. But you can be in the middle, in the mix, and get a great deal. What would be the, like, to get those properties, right? I mean, are they just listed? I mean, just go on hard and find them, or what would you suggest to get something, um, and find those great values?
Yeah. So of course, there's homes listed on HAR.
Hmm.
And when you look at the photos, you can see if it's missing drywall and there's no floors. Who thinks they can sell for value? The house has zero value. You're buying the land.
Hmm.
Uh, um, you can also, by the way, you can also renovate a house. The construction loan, renovation loan is the same program. So it works the same way, just different terms. So if you want to buy a house like that and renovate it, you can.
Hmm.
Um, you can drive by an abandoned home and you can see it's abandoned. You can find out who owns the house by looking up tax records and email them, say, hey, I'd like to buy your house.
Right.
And then on HAR, not only does it list houses, it lists something called lots and land. And you can click that link and it tells you who's selling your house for lot value.
Hmm. Excellent. So good having you on the show. Shalini is also asking again, are the construction rates higher than conventional loans? But you said you guys happen to keep the rates the same, but not everybody does, right?
That's right. That's my bank's policy. If my going rate's 3%, you're getting 3%.
You get a shout out, Shauna saying, King of Mortgages. So good having you on the show. Again, I mean, Craig, it's so, I learn every time because I know you do this every day. So you're just like kind of going through it. But, we need to know what our options are. I've got a property that I'm listing. So, I want to know what's available and, like, what they need to do to be able to even put an offer. In fact, I went through that whole song and dance where I had somebody, I was trying to help them, right, buy my property. And we was just trying to do it with a title company and everything. But it just, having professionals, having realtors, having all those pieces in place just pushes the process along, right? Because you want to be pre-qualified, right? You want to make sure you know where you sit. And when you get pre-qualified, like you can be like very confident. What's the confidence level of saying, hey, here it is. As long as the property appraises, right, you're going to basically get that money. Is that what that means?
If I do it, yes. So
if you do it.
You fill out the application, I got to pull your credit, I'm going to verify your income and your assets. And as long as you don't lose your job, as long as the house appraises, as long as there's no title issue, as long as there's not an ice storm that breaks the pipes in the ceiling and it falls on the floor and floods the house, you should be good. But your pre-approval is only as good as your loan officer. Different loan officers, different skill levels. So make sure you get with a good one.
Get with this guy, Craig Levin. Yeah. Text Expert22. Craig, so good having you on the show. We'd love to have you back. We're gonna let you go on the chat because there's other questions people are having. And again, always good having you on the show.
Awesome, Gabe. Thank you, and thank you everybody for watching.
All right, that was Craig Levin. We're gonna put him off. There we go. There he is. First United up on there. Again, just so timely. It is such an interesting market, and we just want to make sure that everybody is staying safe. And if you're looking to, get into a new home and you're struggling because you're getting outbid like that guy we were talking about 12 times, go ahead and talk to somebody professional like Craig Levin. Make sure they have an MLS number. Make sure what is it called? Is it an MLS? It's an NMLS, right? Because that means that they're licensed brokers and they can stand behind their products. Again, this is Gabriel with Expert35. We look forward to kind of hearing more from you. Text Expert35 to join the conversation. See you guys soon.
Educate during difficult times. We collaborate at Expert35. Expert35. This is for a better tomorrow and a better today. Let's come together and together we will find a way. You got questions, we got solutions. You got problems, we got resolutions. Visit Expert35.com.